Bloomberg Audio Studios.
Podcasts, radio, news.
How's Hong Kong?
It's okay. We're perking along here. It's feeling a little bit better, the last week or two here.
Oh, that's good.
Than it did for much of the second half of last year.
Have you watched? Have you watched The Expats?
No.
I'm debating.
I categorically refuse to do so.
I think I'm going to watch it once all the episodes are out, just for nostalgia value. But yeah, I have heard mixed reviews. So
yeah, I objected to the way they did it, and I objected to.
Yeah.
I was sure I was going to object to certain portrayals, and I bet I'm not going to be surprised. So,
Joe, did you know about that?
No. What is the Expats?
So this was a huge thing in Hong Kong where during the pandemic, they let Nicole Kidman in, without having to go through quarantine in order to film scenes for this show, which is all about expats living in Hong Kong.
Oh, okay. I'll watch that.
It was like a huge controversy. Everyone was so annoyed about it because it was just such an obvious double standard.
I did a deadlift.
1, 2, 3.
Hegemony.
Okay, good. Okay.
What two?
Hegemony. Barges.
This is an after-school special, except
I've decided I'm going to base my entire personality going forward on campaigning for a strategic pork reserve in the U.S.
Where's the best squid ink pasta?
These are the important questions.
Is it robots taking over the world?
No, I think that in a couple of years, the AI will do a really good job of making the Odd Lots podcast, and people will say, I don't really need to listen to Joe and Tracy anymore. We do have
Cha-ching.
The perfect guest.
Welcome to Lots More, where we catch up with friends about what's going on right now.
Because even when Odd Lots is over, there's always lots more.
And we really do have the perfect guest.
It seems like it's fun to be an investor in the Japanese market again.
But after 35 years...
Yeah, you had to wait a while.
I think stocks for the long run, right? The Nikkei, I think recently on some measure broke its 1989, the infamous 1989 peak is back. So yeah, there it is. There's the chart. I just pulled it up on my terminal. Pretty impressive.
Travis, is it fun? Has it been enjoyable?
Yes and no. Partly, being in Japan, you're constantly, and I'm not in Japan, I'm in Hong Kong, but being, involved in the Japanese market, you're constantly told, well, the Magnificent Seven, they were up 73% last year. How about you? And then, okay, well, Japan's up 40% and the S&P's up less. Okay, but that's in yen, and the dollar was strengthened against the yen, and so there's always some naysayers here and there. But yeah, it's been okay. And there's been a lot of changes, and those changes have really been rewarding for those of us who've been watching and waiting for these changes to manifest themselves more publicly.
Yeah, so we are speaking to Travis Lundy. He is, of course, a repeat Odd Lots guest and a special situations analyst who publishes on SmartKarma. One of the smartest people I know when it comes to both markets and general trends, I guess, in Asia, based out of Hong Kong. But you have a lot of historical experience with the Japanese market, right? In fact, this is sort of your bread and butter, corporate Japan, special situations, big events in that market.
Yes, I've been involved in the Japanese markets for 20 plus years. I lived in Japan for 20 plus years. I moved to Hong Kong for a job, and I'm still here. But I do a lot of my work related to Japan.
So this is the thing that you hear. And the thing is, you've been hearing it for a while. So this is why I'm not entirely satisfied. But a thing that you hear is, suddenly corporate Japan, management in Japan have become much more focused on returns or become more shareholder friendly, et cetera. I guess there was this perception at one point, and that management in Japan for a long time ran the business for management or insiders, and now they're running for shareholders.
For salarymen, for their employees.
Is this true? Is this actually a phenomenon that's changed?
Yeah, it's changed quite a bit. It really has. And part of this is, if you go back to the history, back in 1642, seriously, the post-war, the occupation administration broke up the Zaibatsu, but they were afraid of communism. So they allowed the corporate groupings to reform instead of vertically. They allowed them to reform horizontally around banks and financial institutions. And a bunch of the shares in corporate Japan were handed off to individuals, but individuals then sold over the years, and there were no buybacks, but the financial institutions just accumulated them. So by the mid-'80s, financial institutions, that is to say banks, trust banks, regional banks, life insurance companies, property and casualty insurance companies, and then, of course, corporations, they held 2/3 of the market, which is just nuts, right? Since then, it's gone way, way down. And part of this is, banks support, companies. A company has a need to invest capital, so they go borrow some money from the bank. The bank says, here, I'll buy some warrants too. And the warrants become shares. Okay, now you IPO a subsidiary of a major company, and that subsidiary has, 3 different insurance companies, 3 different banks, 5 different supplier partners, 10 different customers already as shareholders. They sell some off to retail, but it's still 80%, corporate and finance. And it's part of society. Cross holdings wasn't some, malicious thing designed to keep out, voting shareholders. It was really, let's go all do this together, support each other, be nice and friendly, and suddenly became rude to sell. Why would I sell this in order to go make money for myself? I'm part of a society. I'm just going to support this. Now, eventually, they started selling down because they needed to. There was we got 1989, and then, by 1998, we were, half off. And, there was a banking crisis in the late 90s that persisted through the early noughties. A couple of brokers went bust in the late 90s. A couple of insurance companies went bust in the early noughties, mostly because they held too many shares, which had gone too far down. That and real estate, obviously. And, the shares started going down, and the banks and insurance companies and corporates started seeing this as kind of an existentialist risk. So they sold shares, and, those shares ended up in the hands of foreigners, retail, and more public shareholders engendered more questions about what management was doing.
So one of the things I'm curious about is what the proximate trigger is or was for this newfound, I guess, like investor/return focused idea in Japan Inc. So, when it comes to Japan, I think I can remember, like, for decades, almost everything touching the Japanese market and economy tends to be discussed in almost cultural terms. It's kind of weird, but like people were always debating whether or not the culture of the Japanese economy could change, whether or not it would be more open to things like imported labor, immigration, or whether that was just impossible given attitudes towards foreigners, but also whether or not I guess the sort of like internal focus of companies was down to a different type of societal value. So more of a collectivist society versus maybe the rampant individualism that we see in the US. So what was the change here? Because people were kind of like dismissive of the idea that this could happen for a long time.
I think a couple of things. First was, when the dollar yen went from 150 in 1990 to 79 in 1995, all of Japan Inc., which produced in Japan and sold abroad, the giant export machine, and they lost huge sums. And so all of the Japanese companies, they set up production bases abroad. So now you have, Toyota making cars in America sold to Americans. And, Japan turned a demographic corner. Japan was much slower to come back after its banking crisis than, the U.S. was after its own banking crisis in the 80s. And, the Japanese business of Toyota didn't make nearly as much money as the U.S. business. So, profits piled up abroad, and, companies became cash rich because companies had found that they were unable to borrow when they needed to invest simply because the banks were too weak to lend too much money. And they were always afraid of lending to companies who had a plan rather than companies who had assets to back. their loans. Companies started to hoard cash. They hoarded cash and they hoarded shares. Shares were not marked to market, and so they became a rainy day fund. And as long as they didn't get hit, you were okay. Go down 50%, you have to impair them. But as long as they don't go way, way down, you're generally okay. So they became a rainy day fund just because they needed to hold on to this stuff, to be sure that they had access to money when they needed it. And so we kind of went through the noughties. Japan, came through the GFC better than, most people, I think. And then there was a push towards increased stewardship and increased corporate governance. Part of this was, based on the Scandinavian experience, where some of the pensions decided to go whole hog on better stewardship and better corporate governance, pressuring companies back in the late 90s. The UK did so in the early noughties. The TSE set up a corporate governance code in 2004, which nobody will remember and nobody ever paid attention to. The UK set up more of a stewardship code and more of a corporate governance code as time went on. There were more reports about the effectiveness. Japan copied that and set up a stewardship code and a corporate governance code after much, back and forthing in the political arena. And it finally got there just after Mr. Abe was elected in late 2012. It showed up in 2014 and a corporate governance code in 2015. There was pressure. People saw it. It was finally, starting to push.
From what it sounds like, I started in the beginning with my cynicism. It's like, oh, you always hear this. It's like Japan is turning the corner on management styles and corporate governance, et cetera. What it sounds like is actually all that's been true. It's just a very long process. So there's the long process of the sort of diminution of the cross holdings, the long process of the various expectations at the TSC, et cetera. So all of it was always true. It just takes a while for these things to sort of come to fruition.
That's exactly right. And, Japan hit bottom in 2012 when the dollar yen was super low. And it's been up since. We've had a 4-bagger, 5-bagger in the Nikkei in 12 years, call it.
That's not bad.
And that isn't that bad, It's been in yen terms, which means it's less in dollar terms, but that's where we started from. And we had to come up the hill through Abenomics, through a bunch of different privatizations to get some leadership examples out in the public so that the media could point to that company. That company did something good. And the hint that everyone's supposed to take is, I should be more like them.
I understand that, at a high level, there are examples of shifts in Japan corporate governance. So, there are actions being taken at a sort of like executive / strategic level. But I kind of wonder how much that filters down to day-to-day business. Because I remember a lot of my friends from high school in Tokyo, they stayed in the city and they went to work for Japanese companies. And admittedly, the last time I spoke to them, a lot of them was pre-pandemic. So this would have been like 2019 or 2018. And so many of them were just miserable. Like the working culture was terrible. The gender dynamics were terrible. I just wonder how much of that aspect of Japan's corporate culture has actually changed.
That's actually changed a lot. And it changed a lot in, post GFC, in part because, companies weren't making any money and Japanese companies didn't want to pay overtime. And so one of the things is, you pay overtime and eventually people end up with a little bit more cash in their pocket. The manager, his job is to take out the subordinates. They all go to some bar and, that's where they end up at the hostess bar. But they no longer had any money. And Japan really, when I arrived in Japan in 1990, this was Juliana's Tokyo. Actually, they went under just before that. But, it was really, Japan's great. Japan's fantastic. Japan's the top of the world. We will conquer the U.S. in 5 years. And, Hong Kong was much like that when I arrived in 2011. But Japan, took us, a step back, and they really, 15 years of being beaten down economically speaking, household incomes not going up, asset prices going down, real estate prices going down. People decided that, leisure, hobbies, foreign travel, all of this is much more interesting. If I'm going to have a job which really stinks, well, guess what? I'm going to quit that job and I'm going to go work for a foreign company where I'm treated better.
Travis,
there's been a lot of that.
You mentioned the importance of you need some company to do it, and then everyone wants to emulate them. So some company takes some actions, the stock goes up, shareholders get rich, then other shareholders want to get rich. Which company did that in Japan? Who is that prime mover?
That's a good question. The example which was perfect here was when the Tokyo Stock Exchange and the FSA changed the corporate governance code the first time, after the original, they made an amendment to it, one of the general principles, which said, if you hold corporate cross holdings, you are obliged to check them every year to see whether you need to hold them in order to do business. And strictly speaking, you should never need to hold cross holdings in order to do business. You should be able to do business with partners all the time anyway. And no company should restrict other companies from, selling their shares. That withholding business as a threat would be a really bad thing. So they put that in there, and then they said, okay, we're going to do this as an example. And CSE owned 4.9% of the Singapore exchange, and they made a little presentation and says, well, we've talked with the Singapore Stock Exchange. We've decided we don't need to do this, but we'll have a continued good relationship with them and partner on products and services. And so we've decided to sell 1/3 of our stake every year for the next 3 years in order to not disrupt the market and not cause market, consternation. And we will apply the proceeds to, improving shareholder returns. And that was the example, just as they changed the corporate governance code. Since then, we've also seen activists coming in. Actually, a perfect example, an absolutely perfect example, is Tokyo Electron. In 2013 to 2015, there was a long-running merger negotiation and approval process between Tokyo Electron and Applied Materials in the United States. And they ran a similar business. And, Tokyo Electron was always kind of stodgy. They held some cross holdings. They held a lot of cash. And they kind of built their business in a certain way. And they spent, basically the better part of 2 years talking to AMAT, and they walked out of it and the deal broke. The DOJ, blocked it. And it was announced at the end of April 2015. And they came out and said, all right, we've learned so much in the process of 2 years. We're going to completely change our business.
The stock is going nuts. This is why. I'm just looking at it.
Stock is going nuts. It's a 10-bagger, right?
Wow,
So,
yeah.
They basically said, we're going to concentrate on our customers in a different way. We're going to have a different dialogue with our customers, much the way AMAT has a dialogue with their customers. We're going to take all of our extra cash. We're going to buy stock back. We're going to set a minimum payout ratio of 50%. So every quarter or every half, we're going to pay out exactly half of our earnings. So what you're going to get as a dividend. And we will strive to produce more shareholder return. It wasn't noticed at the time, but, people noticed it later, and the stock is way up. Other companies, took a less good governance stance at the time, but, there were a bunch of examples, and it's slow, but it's kind of, rolling stone.
So speaking of people noticing, you mentioned just then there's been more activism. We've certainly seen a lot of inflows into the market as well. And I think the fact that, stocks, the Nikkei is at a record, is obviously catching a lot of people's attention. But are you seeing that impacting investor behavior? Like, are people responding to the market maybe differently than they once did? And I'm also thinking back to, again, this is kind of a cliche, but the Mrs. Watanabe idea. It used to be that a lot of retail investors in Japan would be focused on currency arbitrage because that was kind of a way of getting returns in a period of slow economic growth and the lost decade and all of that. But now you can invest in stocks and get a return that way.
Yeah, it's an interesting question. Last year, there were a lot of, strategist comments and a lot of, some of the famous Japan specialist Twitterati were commenting on how much foreign inflow there was into the market. And indeed, in the first half of 2023, we saw about 4.5 trillion yen come in, which was a really big thing. That was the biggest inflow we had seen in almost 10 years. But, the second half, kind of dampened it, and we lost 1.5 trillion. But if you go back 2022, 2021, 2020, 1918, that 3 trillion yen didn't cover half of the outflow during the previous 5 years. So it was nice to come back, but we were at no means, overweight foreign exposure. The other thing is, you've seen this everywhere. The rise of passive has been, dramatic. And that includes, American pensions investing with American fund managers who manage international portfolios. A lot more of it's now in passive than active. And so we've seen a rise of passive flows and a decrease of active flows. But the activism itself depends on active investors, not passive investors, because the passive investors, they just go with the thing. If it gets taken over, it gets taken over. It doesn't get taken over, it doesn't get taken over. What am I going to do?
So one investor who's bullish on Japan and even wrote about it in his recent note, Warren Buffett, and he has stakes in 5 companies, and he says they follow shareholder-friendly policies. Some of them are Mitsubishi, Mitsui, Sumitomo, Marubeni, Itochu. I don't know if I'm pronouncing all those correctly. And he says they also they don't pay their executives as much as U.S. executives. So what is it about these companies? Or like, what is this opportunity or the sort of the new Buffett in Japan trade?
Well, so that was a fantastic trade. And the reason why it was a fantastic trade was because those companies are really great companies. They are effectively listed private equity funds. They are very competitive. They pay their young people a lot of money. They recruit very, very good personnel. The personnel get trained. They enter a kind of a little pod and go forth and do projects. There's a project leader, that's a flying V, goes up in the hierarchy for the next 5 or 10 years. Eventually, you kind of get kicked out. You get sent off to another project. Maybe you spin out and you do an IPO or you take control of a project, which they then invest in. But back when Warren Buffett started investing, they were able to buy the projects buy the company at 0.5 times book. That's pretty good. You generally can't buy private equity funds at 0.5 times book. And these guys had a couple of years of bad returns because they were heavily invested in the oil patch, oil and gas. And when, oil and gas was very high in 2014 and got crushed in 2015, 2016, these guys had to write off a lot of their investments or write down the investments. So they did. And, it stayed weak for a little while. They started buying back some stock, but they were kind of, underloved. But they are still very, very good companies for what they do. They are very financially savvy. They are a bit like private equity because most of their investments are non-listed, and they actually have a fair bit more leverage than you can see by looking at their financial statements. But they just manage it well, and they've got long-term funding. They're super professional, and it could be that the top bosses don't get paid, like $50 million a year. They get paid pretty well, and that's just part of the Japanese way. Really, executives around Japan don't get paid stupid money. Carlos Ghosn was one of the examples. And he got paid $10 million, I think. And everyone's like, oh my God, $10 million.
Oh, Carlos Ghosn. Oh my gosh, that was such a story. I just remembered I did a TV ad for Mitsubishi. This was my other high school job, was doing like ads of various sorts. And it must have been like 2000 or 2001. I think I got paid probably like about the equivalent of $50. I should have asked for stock.
Yes, you should have.
Yeah.
I'd be not a millionaire.
Well, it went down from there from there for 10 years.
Tracy would have held.
So.
Tracy would have held the whole buy and hold investor here.
I would have actually. There's one other thing I wanted to ask you, which is, we've been very focused on corporate Japan, but how much is this whole conversation we're having about changes, how much of this is a reflection or even a vindication of Abenomics?
I think it is a vindication of Abenomics, in part because part of what Mr. Abe wanted to do was he wanted to make Japan conscious of its, shall I call them, positive attributes. Where Japan had something to offer the world, he said, go forth and make money. we will support you. We will, figure out how to get you loans that you need to do to go, spread the good word. And I think that at the same time, we had the introduction of the Japan Stewardship Code, which gave, activist investors basically a stick to beat on companies, and then gave the corporate governance code as, part of the anvil, if you will. And there were simply a bunch of things which entered into the framework which helped companies get out of some of the doldrums post March 2011 earthquake and end 2011 Thai floods, which impacted the Japanese economy dramatically. I think that it was all kind of came together to bring Japan out of what had been 5-year doldrums, which had been at the tail end of 20-year doldrums. And I think that he gets a fair bit of credit, but I really think that kind of a societal change which happened with a large number of inputs. And it's just, as you mentioned, Joe, it's going to take time. A perfect example is cross holdings, right? We talked about that before. Japan is effectively the world's largest long-short fund. There's something like 70 trillion yen of cross holdings across corporates, banks, property and casualty insurers. Actually, 70 trillion was last year's number. I think we're probably up to 100 trillion now. This is a lot of money. But basically, all of those cross holdings are funded by the equity of the holders. That is to say, if a bank sells its cross holdings, it gets money. Then it takes the money and it buys back its own shares. Well, if you unpack that, it basically means all of these companies and banks and insurance companies they've effectively shorted their own stock in order to own the cross holdings. Now that's really, really bad governance. And I don't know that Japanese companies have figured that out yet, but by the idea of saying, I don't need to hold the cross holdings in order to do the business, and then I will take that money and buy back the stocks, that's really great. The thing about this is, the banks hold 1,000 different stocks, and every one of these cross holdings is a strategic position. This is a corporate to corporate relationship. It's embedded in the DNA of the corporates for the past decades. It's part of their business, It's a huge number of relationships which need to be unwound politely. You can't simply go to somebody and say, "Hey, thanks for all the laughs, but I'm going to go sell $5 billion of your stock in the market. I hope it doesn't hurt the stock too much." So you have to be polite about getting out of it. You have to consider how it's going to impact the shareholders of that target company. Also, if you've got, some company has like 15 different crossholders, they can try to accommodate, but they can't accommodate their 15 different crossholders unfairly. They have to treat all of them fairly. So if all of them want out, then, they have to figure out how to get out of their own crossholdings to get the cash to buy them back. So it's a huge, enormous logistical problem here. And this takes time. It has taken time for the past 10 years. It's going to take another 5 or 10 years. Just today, we had the property and casualty companies come out with their business improvement order plans. They had a scandal last year where they had price fixing, and the FSA decided that in part this was due to the overly cozy relationships which were caused by cross holdings. Now, that's kind of garbage, but they said it. And this is actually, it's absolutely perfect for the Japanese insurers because, if you're out there saying, gosh, all of my shareholders are telling me I got to sell your stock, and, I really don't want to sell your stock, but, what can I do here? And then the regulator comes in and says, you must sell the stock. Then the insurance company goes to all its partners and said, my regulator tells me I got to sell all my stock. It's the law. So this is, insurance companies have to be super happy about this because the regulator has now told them cross holdings are bad. Therefore, got to sell.
Tracy, my new party trick, by the way, is I'm going to say, Japan is really a long-short hedge fund.
The world's biggest long-short
masquerading
fund.
As a country, and then I'm going to scratch my beard and walk away and sound very smart.
I look forward to the tweet, Joe.
Yeah.
I'm sure it's coming.
So know how to talk about this otherwise. The Japanese insurers, and they're one of the really big cross-holders, they had to come out with their plans, and they said, we're going to get rid of our cross holdings as soon as we possibly can. And one of them said, we're definitely going to get rid of all of them by fiscal year 2029, which is like 6 years from now. So, it's going to take time. I don't think there's no expectation that it's going to, they're all going to be out the door next year. And what the other interesting thing here is that if the insurance companies have been told by the FSA that they can't hold cross holdings because it's a danger to appropriate business practices, well, what does that say about banks? The FSA regulates the banks too. So if it's bad for insurance companies, it's bad for banks. So we're going to see this sometime later this year, I think, where the FSA is going to go into the banks and say, you too, you got to do it. And, we're already seeing it here the last few weeks or a few months where companies and banks, et cetera, they're doing huge offerings of stock out in the market. Foreigners are buying them. They're distributing the shares out to other buyers, et cetera. So there's a lot more flow here this year and the very end of last year. So we're going to see more flow, more interest. It's going to all happen. It's all good.
It'll be good for years.
It sounds good. Again, like it makes me long for the go-go years of Tokyo. And when you mentioned this, but when everyone was like, oh, Japan can do anything in the world, Japan's great. Like, it feels like we're maybe not that extreme, but coming around a bit to that again.
Yeah, I don't think we're going back that way, actually. Definitely not. I think that what Japan has done is they've learned to be earnest and have, a fair bit of humility, but also, this Abe pride in what you can do. May not be able to do everything, may not be Magnificent Seven, but I know I can do the right thing. And that's one thing which I think foreign investors should get out of Japan. And I think, Warren Buffett made a comment about that. There's some high quality businesses in Japan and, governance is pretty good. And it's got a tailwind to it. So that's the right thing. And, there may not be a Google or an Apple here, but there's a bunch of really good stuff.
Tokyo Electron.
Tokyo Electron.
I want to take Joe to Tokyo at some point and show you all the places I used to go out in. Lots More is produced by Carmen Rodriguez and Dashiell Bennett with help from Moses Ondom and Cale Brooks. Our sound engineer is Blake Maples. Sage Bauman is the head of Bloomberg Podcasts.
Please rate, review, and subscribe to Odd Lots and Lots More on your favorite podcast platforms.
And remember that Bloomberg subscribers can listen to all our podcasts ad-free by connecting through Apple Podcasts. Thanks for listening.